The goal for these two, of course, part of the deal that we have with the DFIs, we go up to 850 in DRC and additional 120 in Cameroon. So that will make it 242 plus 850. I know, by the way, I don't have my calculator on me, but it's close to 1100. But what we have engaged with as of today, all the equipments have been sent to Cameroon and DRC, and soon to come for South Sudan as well. We are using our own operating cash as we speak, and there's committed money for 120 sites in DRC, 120 sites in Cameroon, and all of those should be deployed within the next weeks and months.
Francis Létourneau is back, CEO of NuRAN Wireless, trading on the CSE under the symbol NUR. Francis, welcome back.
Thank you very much. Yes, back from Europe. Thank you very much for hosting me.
Yesterday, we tried to do this conversation from the airport, Charles de Gaulle in Paris, but the internet wasn't cooperating there. So, tell us, what were you doing in your travels? Why were you in Europe?
So we were there to meet with the DFIs with whom we've engaged with. Part of the announcement we did in January for the two DFIs that are coming together for a 24 million USD package, debt package for financing the infrastructure in Africa, and that was something that was planned for quite a long time. So we are now reviewing all the aspects of the company. Of course, when they send a term sheet and a mandate letter, it means that the money is committed. But you need to go through some kind of a process, and that was one of the major, I would say, milestone that we needed to reach. I think box checked. They've been pretty happy. Jim, Gael have done a fantastic job, especially Gael from an operational point of view. If he's been in Africa, he knows Africa. And it was breathing through the discussion we were having with them. You also need to know that DFIs, they have a developmental focus. So you need to tick all boxes: environmental, social impact, and everything. So, and I think Gael, due to his past experience, same for Jim. Jim has been in Africa as well. They know pretty much everything about Africa. Me, I knew more on the sales side, but these guys have been rock solid during the interview.
Sure. What DFI? Who are they?
We can't disclose their names today. It's development financial institutions. So you have a couple of those around the world without naming them. So I can drop name: Asia Development Bank, African Development Bank, European Investment Bank, IFC, part of World Bank, NOR Fund, all these big guys. So two of them came out for this. We were lucky because in 2022, Gael was invited to a workshop, and he has met with a lot of those gentlemen, and we were able to tap into a digital envelope that was available, but the money and everything needed to be committed in 2021, which we did and announced beginning of January. So we were lucky because typically with those large organization, it takes like 13 to 14 to 16 months to get the large senior loans. So we're in good shape with those guys, and we're now thinking of doing more. FYI, the second reason for being in Europe is we were to meet with a couple of IFIs this time, international fund, that will come as equity partner at the NuRAN African Holding level. And for the 6 million remaining, remember that the part of the 24 million, it's part of a $30 million package where NuRAN need to bring an additional 6 on top of this. We said that we're going to bring that money at the African Holding Company level. So we had 3 different meetings with 3 different groups that can cut significant checks. So it's and they're asking, do you need more? So I think we're in good shape. We can probably expect term sheet soon, and money will probably be drawn down before the DFIs themselves, but also brings me to another objective of the week, was to kick off the debt package number 2 for additional countries and to finish the build of DRC. Sorry, it takes a bit of time. And so we've started this process. We have engaged already with 2 groups in Europe that we can't disclose, of course, again, but the goal is to bring another 35 million on top of what we're doing with the 24. And this 35 million will be financing the balance of DRC and the new countries, including South Sudan, as well as including new contracts that we foresee in the next weeks and months. So we want to get ready. So we might happen to raise more equity to be ready for that $35 million package as well. So it's a big finance play. We've talked about this several times. And the last objective, it was to meet with Orange for what we call a steering committee. So we were meeting with Orange MEA, Middle East and Africa group. The CTIO and the deputy CTIO are based in Paris, and the rest of the team is based in Casablanca. So we've met with them face to face, or mask to mask, I would say, because it's still COVID, right? So we've met with them, and they were pretty happy with the result. And I suspect that probably that steering committee, it will probably be a milestone that needed to be reached in order to get some movement from an RFP point of view, because we're still shortlisted on the 4 RFPs that we've talked about with Orange for 4 different countries. And I think that meeting, or that box tick, needed to be done sooner than later. So it was good that we could combine this in this European trip. And having Gael with me, of course, was a winning factor, because Gael has been explaining everything that we've gone through, all the different mechanisms that we've put in place to overcome different challenges that we've had. We've presented the status of the inventory, what sits at the custom clearance side, and that's about it. So they were pretty happy with the results of our thing. And FYI, we're not the only one, James, to suffer from those delays. They've told us that a lot of their projects have been delayed severely, but more than that, most of the suppliers were coming back to them, say, we will increase the price because of this, and that, due to the fact that the global transportation situation is costing more than expected. So a lot of the different suppliers, OEM suppliers, were coming back to Orange to ask for more money. And they were really pleased that we didn't do. So we said, we've managed this properly. We've managed to stay in budget, so which is a good sign and a good box check for us. So that was all about the trip, and I'm extremely positive about everything that has happened there, and we look forward for something to happen and to announce in the next couple of weeks.
And so what is your anticipated cost of capital in these debt structures in terms of interest rates, and are there any sort of equity sweeteners in this whole proposition?
No. They're expecting IRRs of around 10-12%. 3.5% interest rate, 2 years capital grace, and they are looking for kickers, so dividends, to go back their way, that crank up the IRR up to 10-12%. So this is the way this deal is structured. But it goes over time. So from the moment we disperse to the moment it's finished, it's like a 7-year loan period. And at the end of the day, since we're generating a lot of cash, some dividends are going back up to those DFIs.
Sure. So the structure relies on a sort of a royalty from future revenue. What is the percentage of that future revenue of the company's net profit on the net profit?
As I said, the interest is 3.5%, and to their I would say IRR, projected IRR goes to 10% for one, 12% for the others, and it's dividend. So it's not like a royalty; it's generated from the cash balance that we have at the end of each period.
I see. So is it ongoing? Is it in perpetuity?
No, it finished after 7 years. So they need to reach like their 12% over a 7-year period. So it's all good, and it's already accounted into the financial model.
Okay, well that's remarkably good news. I mean, I had no idea it would be on such favorable terms, especially with 2 years grace. That's excellent in the event of some kind of economic upheaval. Okay, so right now we're sitting at 53 towers in operation, and obviously this is the money to put how many more towers online?
So the goal for these two, of course, part of the deal that we have with the DFIs, we go up to 850 in DRC and additional 120 in Cameroon. So that will make it 242 plus 850. I know, by the way, I don't have my calculator on me, but it's close to 1100. But what we have engaged with as of today, all the equipments have been sent to Cameroon and DRC, and soon to come for South Sudan as well. We are using our own operating cash as we speak, and there's committed money for 120 sites in DRC, 120 sites in Cameroon, and all of those should be deployed within the next weeks and months. So actually this week you will probably see a press release that will outline exactly what we've presented to Orange, and that will tells you where we stand. So you have all the different bars, stock in country, custom clearance, installed. So you will have on this press release a lot of material to understand why there's been delays, where the stock stands, and so forth. So Orange is happy with the pace. We're happy with the pace as well. Of course, as soon as the sites are live, then we generate cash, because we start billing the minimum guaranteed amount, and then on top of this, the usage. So moving forward, we expect those 120 sites in each country to be delivered probably by the end of April max.
We had a question, and the question was that the NuRAN's reporting in the last quarter indicated a decrease in revenue relative to 2020 that was quite substantial, from $2 million down to just over $1 million. Is this a temporary phenomenon? Is it a one-off? Why has revenue decreased relative to the same quarter last year in 2020?
The answer to this question, James, is easy. We've made a switch from a equipment sale to a network as a service. So we've decided to go to leave the potential revenue from the CapEx sale to the sideline and focus on the NaaS contract. So that's why you see that we just stopped selling the product. We are using the product ourselves, and that's why we were not pursuing those opportunity of selling the product, hence the reason why the revenue were down. And you can expect probably the same thing over the next couple of quarters until we reach up to 450 sites delivered, which could occur in Q3, end of Q3. This is where you will see the company going back to positive EBITDA situation. But that was natural because of the business shift we've done.
Sure, that makes sense. That's a great answer. Okay, Francis, that's great. We'll leave it there for now.
Thank you very much.